Good morning, and thank you, Judith. Enlighten the audience, that's a big ask, but we'll do what we can. So, ladies and gentlemen, first a little introduction. Hardman Agribusiness is a capital markets advisory firm. What that means is that we support agribusinesses in their pursuit of capital and their fundraising activities. Our team all has either a background in agriculture, as farmers, as agri-economists, or as C-level executives within large-scale agribusinesses on an international scale. We look at agribusiness in terms of the entire value chain. So we're interested in the risk implications both from the upstream to the downstream. One of our key areas of focus is the tropical tree crop sector, and cocoa has been a focus since about 2010. And in the context of the point I've just made about looking at risk along the whole of the agri value chain, what always has struck us about the cocoa sector is the extreme mismatch between a highly sophisticated, extremely wealthy downstream sector and an extremely unsophisticated, desperately poor upstream sector. These are not in good alignment. So the question is, Latin America to reclaim production leadership, could it, or rather should it? We've heard the discussion today focused essentially on two countries, Côte d'Ivoire and Ghana. In the interests of rebalancing supply to reduce dependency on West African risk, indeed I think there's a very strong case why there should be an effort for Latin America to reclaim production lead. Presently that challenge is in its infancy, and you've all seen these statistics already this morning in different ways. A huge reliance in West Africa on two countries that we just mentioned, and in terms of the harvested area, a very weak performance from Asia. And maybe as we face this commodity cycle downturn, maybe with palm oil having moved from $1,200 a ton to just over $500 a ton, perhaps in Asia there could be a change. But presently it's been a weak link in the cocoa chain. When we look at the prospects for Latin America to reclaim its position as a lead producer, the evidence is good when it comes to production. As you can see from the chart on the extreme right of the screen, this is the only good picture in the cocoa world. You've got production up and you've got yields up. Look at Africa by contrast. Production is up, but yields are essentially flat. Good progress, yes, in Ghana over the last 15, 20 years, but across the region as a whole, the picture isn't looking healthy. It's a very flat performance. And in Asia, we look at the data, and it's all plain for all to see. We move to the next slide, and we look at the evidence for sustainability of what's happening in terms of cocoa production. What do we see? Again, the picture on the extreme right-hand side is good. You've got a growth in harvested area, but you've also got growth in yields. In Africa, we've got area outstripping yield growth. And this is an area of great concern for us. One of the things that we have found great difficulty in accessing is accurate data for planted area. And we've heard already today that high prices are the best fertilizer. But one of the issues for Côte d'Ivoire is exactly what is the planted area. Significant research conducted by the Felix Houphouët-Boigny University has indicated that there has been substantial degradation of the protected forest areas in Ivory Coast for cocoa farmers, particularly by illegal settlers. And so the picture in Africa might even be more extreme than we are seeing. The planted area could be higher than the data from the FAO, which the best data we've got is 2013, already out of date, is indicating. So if we move to the next slide, and we look at the picture for two sectors, the palm oil sector and the cocoa sector. What we can see in cocoa is that this just is not sustainable. We have a rising area and we have flat yields. Look, by contrast, what's happened in the palm sector over the last 30 years. Yields have trebled. Now that's come about with big investment. At least $60 billion has been invested in the palm oil sector in the last 30 years. In the cocoa sector, it's difficult to know exactly what the investment has been, but in terms of yields, there has been little gain. So a very big contrast. And the results for the palm oil sector have been significant in a number of ways. Not only has it produced a significant stock of vegetable oil for the world markets, but it's produced great wealth. The palm oil sector at its peak was trading at about 100 billion for the listed sector. What's the position for the cocoa sector today? It's worth about 60 million in the form of one company, United Cacao Limited, with its operations in Peru. So we move to the next slide, please. We think there are reasons to worry. When we look at production growth in Africa between 98 and 2012, it was up by nearly 56%. But if you look at how that was divided, nearly 69% of that growth in production was by expansion of area, only 23% by yield. We go back to the palm sector, a trebling of yields in the past 30 years. If cocoa production is truly to be sustainable, if a significant downstream sector is to be properly supported, we must address, or the sector must address, that yield situation. We've heard a lot about Ghana this morning, and as we know, Ghana surprised the market with something like a 20% cut in expected production this year. In agriculture, one is used to volatility in productivity, weather, disease, a variety of factors. But as a number of speakers have stressed this morning, what was truly shocking about the situation in Ghana is nobody knew. And still there is no convincing answer as to why productivity was so low. When CocoBot was approached by some of the leading financial papers, there was no one available to comment. These things upset the market deeply and no doubt caused a response in the price of the traded commodity. So who is worrying? Next slide, please. We call these the cocoa empires, and they are worrying because they have a lot at stake. Euromonitor estimated that chocolate confectionery sales in 2014 were 117 billion. We have international chocolate confectionery brands, all household names, with an estimated value at today's market prices in excess of 200 billion. And you can see the performance of our chocolate index against the S&P, the green line at the bottom. Now, why have investors favoured this sector? Well, it's clear to see. Linton Sprungli, this year, 9.8% organic growth in revenues. Hershey, nearly 7% 5-year annual growth. Barry Callebaut, 2.5% volume growth for 3 quarters. This sector has generated enormous wealth, and yet that wealth has not radiated down to the producers of cocoa. And this is a problem. If we move to the next slide, we see that commitments to sustainability and sourcing by 4 leading names within the sector, all by 2020, Laurent's year for a production shortfall, some would claim a significant one. I mean, is it really possible that these companies are going to be able to source 100% of their cocoa sustainably in 2020? I think it's highly unlikely. And the reasons are clear. When we look at the commodity price driver, of course, it's demand. And we have seen already today, I think Laurent made the point, that 51% of consumption growth has come from Asia. And if you look at my colleagues' very clever bubble charts here, and you look at where China and India and Indonesia are today, and you peg that against where Japan is, you can see the enormous upward pressure potentially, on supply. Now, maybe we've got a few years of respite. The bricks are clearly crumbling. We've seen that cocoa confectionery sales are down, and that may take the pressure off. But on the assumption that the wheels don't come off the global economic bus completely, and that these emerging market economies come back on track, China, Indonesia, Brazil, Russia, then there is going to be continuing upward pressure on supply. And also on the sustainability commitments of the household names that we were mentioning. Area growth, yes, but we must have yield growth as well, and that will require investment. Next slide, please. So back to the proposition. Could Latin America recover its production lead? The interesting thing about Latin America is it's the only region across the tropical belt where there is a clear, identifiable nucleus of a commercial sector. Africa is about smallholders. Asia is largely about smallholders. You can see from our own researchers, and we may have missed some, but 38 significant plantations in LATAM, 4 in Asia, and we really had to look for those. 5 in Africa, 47 across the world. Planted hectares, again you can see the numbers, tiny, but at least in Latin America, we have the nucleus of a commercial sector, attracted by secure land tenure, not something you get in Africa, a supportive banking system, not something you get in Africa, good availability of labor, and a traditional cocoa culture. One of the reasons put forward for the decline in Asia, and one seasoned player in the sector said to us that Asia has lost its cocoa culture. We've heard already today that, of course, Latin America is famous for the production of high-yielding materials, particularly CCM 51. There is, from our survey of the market, a vibrant cocoa culture in Latin America. Combined with the fact that there is a nucleus for a commercial sector, we believe that's a very positive read. And if we move to the next slide, please, we will see that investment for growth, again, LATAM leads. We have identified some 200 million or thereabouts of investment proposed to go into the development of about 20,000 hectares in Latin America over the next 2 to 3 years. In Asia, that's much lower. In Africa, about 27 million. So a significant bias towards the development of the sector in Latin America from our researchers. We could have the next slide, please. So to conclude, as we see it, West African supply growth is looking vulnerable due to the fact of its reliance on increased area and the very poor performance in yield development. We do not believe this is sustainable. African farmers are clearly handicapped without secure land title and without access to capital. As I said at the beginning, we see that there is a misalignment between a highly sophisticated downstream sector and a very unsophisticated upstream sector. 200 million of new investment committed to Latin America. It has a defined professional production sector, and that looks to be expanding. Asia is a picture of persistent decline over the region as a whole. Maybe that will come back on stream as we have seen an alignment in the demand for certain commodities, particularly palm oil. We asked the question, how are the cocoa empires to meet their ambitious sustainability pledges by 2020? So a sophisticated 120 billion per annum global consumer goods sector depends on one of the least sophisticated farming sectors in the world. We conclude that the cocoa price will continue its upward path, and there will be rising levels of investment continuing to flow into the Latin American sector. Thank you very much.